Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the week of February the 23rd, 2020. The winter bears, have stepped in and looking like they may be rearing their head to try to take control of the auction as we move into the latter part of February, with all major indices down week over week, leading the pack with the Nasdaq down with 1.37%, which is pretty significant and driven primarily by overall news around the coronavirus continuing to expand outside of the region, along with making some larger economic impacts, not only to China, but also into Japan, South Korea, the United States, and primarily driven by some of our large multinational corporations, specifically Apple, providing a little bit of guidance this past week, stating that the coronavirus will lower their demand for the rest of 2020. And they actually ended up closing a number of their stores for a good week and a half, 2 weeks. So we have seen some pretty consistent decline week over week, driven by news coming out of China associated with the coronavirus, and it has impacted all of our major indices, and even seen some pretty significant reductions in overall gains that we have seen very aggressively over the last few weeks. However, we are not ready to make a full bearish call as of yet, and we'll talk about that as we jump into the latter part of the video. However, we have seen some pretty orderly selling coming across the board. So we do identify that as the larger institutions somewhat stepping their feet into the water to reduce risk, but at the same time, very mechanical locations and very visual locations for some reversals that we have seen pretty consistently coming out Wednesday, Thursday, and definitely on Friday of this past week. So we do want to highlight a few of those, and we'll call them out very specifically on our weekly charts, as we always will review our indices. But one of the things we also want to highlight is the very large reversal and continuing moving forward of gold this past week. As we've said in majority of our videos over the last year, we are very bullish on gold, and we did see a pretty significant breakout from a number of weeks of kind of consolidation. So we did see about a little bit greater than 3% breakout with a huge range of almost 6 points in this last week. So we do want to continue to look at gold as a longer term play, but we did scale out a number of our positions in gold to lock in some profits, and we are letting a few run to just see where we can continue on upward, potentially reaching up toward the 170 mark over this upcoming quarter and into the second quarter of the year, if there is opportunities for indices to kind of reduce in prices, coming back into closer into value. So we'll dive in. As always, we'll start off with the S&P 500. As we jump into review our S&P 500, as we always do, kicking off the videos, I did want to take an opportunity in something that was identified to me as I was doing my prep for the video. So we'll start off with the index itself. We'll start off with the SPX, and what I have in front of you is a 15-year weekly chart, and something that was pretty surprising to me, if we take a look at this longer term trend going all the way back into 2013, we see a pretty significant trend line over the last 7 years that has pretty much been touched, and have seen that reversal that we saw last week as a potential resistance line of the longer term trend of the S&P. So we all are very clear that we've been in a very, very bullish market for seems like forever. Now, this could be an indication that that bullish movement is looking to either slow down, reverse, or kind of go sideways for a little bit. So we're not necessarily convinced as of yet that there is going to be larger follow through of the selling, because the news of the coronavirus impact has caused a pretty significant fear across the world, with increased impact not only within Asia, but then beginning to impact broader countries, and specifically countries that have a large economic impact in regards to the development of products in China. Specifically, Apple and a lot of our tech industries have already released and communicated out that they will see some economic impact and have reduced their guidance moving forward. So just want to start off as we do our weekly review as an opportunity for us to continue to look at this trend line and see what has happened when we've touched it. So we've touched it going back all the way to 2013, and multiple times in 2018 we've touched it and have reversed pretty much back. But at the same time, this is a potential shorter term reversal for the bulls to step in, which they have historically done for the majority of 2020 and the majority of 2019, as in when there has been a smaller pullback closer to 1%, maybe just a little bit larger than 1%, the bulls will step in and pull it just that much forward upward to potentially break this longer term trend line. So I wanted to start off our video just with something that I wanted to highlight as an opportunity to continue to do our analysis, and we'll go back to our 1 year weekly chart as we always will review that we have seen a higher high this past week, which is bullish, as well as a higher low this week, which is bullish, and a very mechanical identification across highs of previous weeks as potential support. So this is a very orderly auction and a very orderly sell-off. However, we do not want to diminish the overall impact of the coronavirus, and it's very potential for us as we open up into Monday and Tuesday that we see a larger gap down. So that is a possibility. We don't know definitely, but as what we have seen so far, our analysis showcased that we will potentially see some type of decline, but we may continue in a larger trading range where we do see this next week actually coming up with a bullish week. So we kind of move back in kind of this TikTok pattern over the next few weeks as news and the impact of some of the macroeconomic things begin to settle down. Now, at the same time, we have seen this before where we are so far away from our larger moving averages that this is an opportunity. If this 322.50 level is breached, we do see an opportunity to potentially move down into probably 328, which maps right into our 9-week moving average. And at the same time, there is an opportunity for us to see a aspect to pull back potentially all the way down to our 20. Now, that's a very aggressive target. However, if the news continues to be very, very negative, we do see this as an opportunity and for us to kind of step in longer term. But at the same time, there is some higher volume nodes that which would kind of attract volume down at the 327 level and certainly down at the 321 level. So we'll continue to watch this over the next couple of weeks to see if the auction does have some continuation to the downward, and we'll just monitor that. But we do want to kind of keep our powder dry, so our skew is to the downside with a sideways potential in a larger trading range. And we'll shift over to the Nasdaq, and we also have seen again here in the Nasdaq higher high as well as a higher low. Now, very similarly, we are very much extended outside of value, and we are very much extended. Obviously, the Nasdaq has been on a very strong bullish run over the last 12 to 15 weeks, going back toward October of 2019, very aggressively, just upward, upward, upward every week. Now, as you can see, we're very far away from our overall moving average, coming in at 222 on the 9-week and 213 on the 20-week. So there is an opportunity to see if we breach below the low of this past week, there will be some continuation and some follow through. Now we'll take a look at the daily, which we don't necessarily analyze, but you'll kind of see what we're looking at if we zoom in just a tad bit here. A clear bounce right off of the 20 period daily average, which is a very mechanical and visual reference indicating that there are shorter term traders that are in control of the auction, with a little bit of our institutionals coming in and just kind of following with that volume. However, bouncing right off of the 20 is an indication the bulls will step in, but is there enough momentum to carry that forward? Probably not. However, we do want to watch that. If the 20 is breached, we do see some type of gap fill coming down into the 225, 224 area as a potential support area for some longer term investments, kind of a buy the dip type mindset. And we'll shift over to the Russell. Now, we have continued to be very bullish on the Russell. However, we have seen in the last 3 to 4 weeks a pretty bullish run up to just short of some of their all-time highs. And at the same time, we have touched this past week and the previous week right into a zone that is a longer-term trend line touch and reversal. So we have a double top on the weekly, which kind of accelerated the additional selling that we have seen in the other indices. And we'll pull back just the lens just a little bit, where you can see going back into here at August, where we have seen our all-time highs is the pivot point for this trend line. And we do want to highlight that over the last 2 months, we have seen this trend line holding with very strong resistance and sell-offs coming off of it. So we've knocked on that door, so to speak, for the last 2 months and have been rejected. So there is an opportunity for us to see some continuation of a follow-through to the downside this coming week within the Russell, which could be a leader for other majors that continue to reverse based upon some of the news that we've already shared with you. But at the same time, again, we have seen a higher high, double top here, roughly about $168, as well as a higher low, which is some type of bullish signal as well. So you have some indecision, which is somewhat of an indication of the actual candle pattern that we saw this past week, roughly kind of a spinning top or almost a doji, where we did see ourselves kind of closing relatively close to where we opened, just short of a few pennies offset from the open to the close of this past week. So we want to begin to kind of watch the Russell for some potential movement downward. And if we do go below the low of this past week, roughly about 166.33, we could see some follow through moving forward. And we'll kind of conclude out our indices taking a look at the very bullish movements that we saw this past week on gold. So again, we have been very much been bullish on gold going back into last year, but we saw a huge breakout above our sell zones that we had identified, roughly 151 and roughly about 150, with a breakout as well of this longer term trend line that has been going back multiple months. So we have seen some pretty consistent chart patterns with a nice breakout of this balance zone that we have seen over the last 6 weeks. And we do see continuation to the upside in gold if we do see some downward momentum on our broader indices. So we'll conclude this week's update with some positive news, as well as just watching how the market will react to this broader news. It's beginning to accelerate and creating a lot of fear across the board. So there are some opportunities for us to take advantage from a buy the dip perspective, but at the same time, as we started off the video, the SPX is touching up to a multi-year resistance trend line, and this could be an opportunity for the bulls to begin to sell off some of their positions that have moved very, very aggressively over the last year, and certainly borderline exponentially or parabolically in 2020. So as with always, it's your money and it should be under your control. Take care.